3rd, and I'm here with my co-hosts, Alina Meladina and Scott Benson. How you guys doing today?
All good.
Doing great. Doing great.
Right. I love it. Scott stands up for the introduction. I mean, I appreciate that. It's like when I walk in the room, people stand up. Scott stands up when I do the intro to the show. Thank you, Scott.
You know, I so appreciate you and everything you do. I got to stand up for it, man. You know, that's just how it is. So
that's it, man. So we are fresh off the heels from the launch of the Sunny Isles penthouse condo. I know we had an open house. I was there. You were there. At least I was there, somewhat there via Zoom. Yeah. We did have a rain that kind of rained on our parade, if you will. How did it go outside of that, Alina?
Well, we got a couple offers. So they're all cash offers. And we negotiated the terms. So we'll see what's going to happen. Haven't accepted offers yet, but have activity. We'll see.
Nice. Are we going to continue to have more open houses, or was that we launch it and then we go? How do we do it?
We'll see how it goes. Because we just did the open house, and we have some action and some excitement from people. So we'll see how it goes, and if the property doesn't go under contract, maybe in a couple of weeks we'll do open house again. It's not that easy to do the open house in this property because remember, there's no AC. We're all finished.
Yeah.
And we got super lucky because of the rain. It wasn't that hot, and we opened the windows as well, so the breeze from the ocean comes, and it's.
I can understand your challenges with that. That's obviously not ideal, if you will, right? But hopefully for you, Alina, and your client, you guys get that thing in the contract and sold. I know that's a great opportunity, and it'll lead to more opportunities for you. So, hey, let's talk about what a loan on a deal that works like. So, you put me on the hot seat last week. I didn't have the answer, but I always like to go do my research and come prepared. So now I have the answer on how to finance that property. Okay. And so it really depends if the person coming into it is going to make it their permanent residence or this is an investment. And it's going to be a 2-step process either way. It doesn't matter. And what I mean by that is this. In order for somebody to make that their personal residence, in my side of things, I'm looking at, they're still going to come in with an investment loan in the terms of like a bridge, fix and flip type of loan. And the difference would be instead of selling it, we're just going to refinance it once it's done. The way the lenders look at it, it's actually a really easy way to get a loan too. They're not looking at income. They're looking at FICO. They're looking at down payment. They're looking at making sure you have reserves. Then they're also going to look at your history of doing flips, and that's going to determine on how much you put down, the loan to value, and the rate you get. But I mean, these are loans that we could turn as fast as 10 days, 14 days. I mean, really quick, and somebody's getting into this. So the way they do it is this: they're going to go. Depends on the experience. Some of them will go all the way up to 85%, 90%. Depending on the lender and also the purchase price of the loan itself. Then they're going to go 100% of the rehab money. As long as the after repair value comes in, again, depending on lender, at 75 or 70% combined. So
75% combined of what?
After repair value. So let's say we buy this at $4 million, we put 1.25 in it. That's going to be, now you're at 5.25. Scott, you're my math expert on the team here. I'd love to put him on the spot. What is 70% after repair if we want to go loan to value? So if it was
70% of what?
Well, if it was $7 million, we would be at what?
4.9 million.
Okay. So in order for this to be financed at 70%, the after repair value would have to be like 7.5. So that gives you the range of how much they can borrow. So then what would end up happening is you would have to come more out of pocket for the repairs or for the purchase itself. Mm-hmm. So they look at both factors. They're going to go with the lesser of the two. So if the after repair values is the LTV, if that comes in and it's higher, then they're going to look at the combined, whatever's the lesser of the two between the combined values or the appraisal after repairs. And typically,
I hope everyone that is watching understood the numbers. If not, that is One, you can text, call, mail,
Yeah.
for details. I'm
Yeah,
like,
so
I'm trying to focus into the the numbers.
No, we can.
So
We can,
let's say, for instance, the property is sold for $3.9 million. Let's say let's say 3.7. I don't know.
okay.
Let's say
Scott,
3.7.
Scott's gonna do the math for us. 3.7. And
then they put $1.2 million in renovations. So we are at 4.9.
Yep.
Okay.
How much the property has to be appraised for after the renovation in order to qualify for that type of loan?
Sure. Well, they'll be able to qualify, just depends on how much they're going to get. So let's caveat that. So, but in order for them to get that full amount, let's go with that number first. So,
and the full amount is?
Well, that's what we're going to find out. So Scott's going to do the math, but I would start at 75% because some will go to 75. If you have a real experienced investor does a lot of these, they'll go up to 75% after repair value. So Scott, what is that looking at?
So you're looking at about 7 million. I mean, if you're at 70%, so you could go slightly less if you're looking at at a 75% LTV on the property. So that so your after renovation valuation, that's what you'd have to be looking at.
Yeah, so Alina,
I will say to be comfortably, it's going to be 6 million after renovation because I know the market in that area. So we're looking at 6 million.
Yeah, so the most you qualify. I'm sorry.
So what numbers are we looking at?
Okay, so you're looking
at Scott, you want
4.2. Yeah, okay. So you're looking at about 4.2 million. So you're looking at 4.2 is in total. So they'd have to come up with the rest of the dollars for the renovation and purchase on their own,
or the down payment. They go bigger down payment and 100% of the rehab.
Right.
And typically that'd be done on a draw. But that's actually really good if you think about it. And look, there's going to be other properties that will pencil even better than that. This happens to be a big dollars you're working with here and a lot of variables. I mean, in that property, you and I both know, your baseline is 1.25. They could easily put 2 to 3 million in rehab if they wanted to. Because I mean,
let me ask you a question. Once they finish, they have to close the loan.
Yeah. So this is typically going to be a 12-month to a year and a half loan. And we'd have
it's approximately the amount of time that the renovation will be done. That's what the contractor told me. It's from 12 to 18 months. Yeah,
typically it's 12. They go to 18. And then what would happen is if you're buying it, like say, I wanted to live there and I bought this. So I would do this loan. And then and the only caveat is you have to have residence somewhere else. So now it's an investment, right? If I went into this and moved right into it and made it my primary residence, that's not an investment. But I can't move into this. It's impossible. So by default, whoever the buyer is qualifies for this to be an investment. So it's perfect. What would end up happening is...
And then they can transfer it as a primary residence as soon as they finish with the construction.
As soon as it's done, we go get them a loan as a primary residence. And we're just doing a super jumbo at that point on a $6 million, $7 million loan.
The beauty about this, if you open my other listing, it's going to be 2843.
Okay, is that your Brickell?
If you're on AGK, it's Coconut Grove.
Coconut Grove, okay.
And it's also a raw finish, very large square footage, prime location, Coconut Grove, located in Grove Tower. Right next to the marina, walking distance to all the restaurants and and it's the same.
Nice Bayshore Drive.
That's right. You can share the screen. We can take a look, see the property. It's the same concept. It's raw finish, 2-story. The pool level and then the level build. Yes, this is the rendering. This is how it's gonna look if someone is gonna buy it and decide to finish it. This is what it looks like right now. The location is a prime location in Coconut Grove.
What's the what's the price of the renovation on the property beyond the purchase price?
We are looking at $3.7 million purchase price. It's negotiable. And I will say the renovation cost for this property will be approximately $800,000.
And what's your estimated
And
value
the beauty,
afterwards?
the beauty about this particular property, there's two folios. You can do one big huge unit, first and second floor. You can split it, and one unit will be one floor, another unit will be two floors. And depending on what you decide to do, the property can be yes, that's two floors, you see. The property can be used this way or the other way. Another important part is that this property used to be commercial. What I'm saying when I'm saying commercial, it used to be a nightclub. So if you go to the city, you still can see that it can be commercial use. They changed the condo docs, and now it's a residential that people now negotiating to convert it back to. That will be a golden if you use it as a commercial in such a prime location.
Got it.
That's going to be very, very exciting.
I
can't tell you the exact number.
Yeah,
I can't tell you the exact number because it depends on what is going to happen with this property. People are going to keep it as a single residence and have it one condominium. They're going to split it, or they will convert it to the commercial. That's all different numbers. So I'm going to be really if I tell you on the one particular scenario.
Right,
but
let me ask a question real quick. So this is the residence that has multiple condos in it. At one point, the unit you have was a nightclub that was based in this building. Is that what you're saying?
That's right.
And then you can make it a nightclub potentially again. Can you make it a restaurant? If you got it zone commercial, what are the options?
I don't think it's going to allow you to do the nightclub. Okay. So let's be more realistic. It's not going to be a nightclub, but you can make a lot of other things. The last person I showed the property to was looking into offices and sharing office concept. That was the last person. And people were looking at it to make it as a gym, as a spa.
Yeah.
So there's a lot of things you can do. And if it's commercial, the price on this property will be much, much higher.
That could be the future headquarters of the Real Estate Mortgage Insiders.
There we go.
It could, right? It could.
Yes. Please move to Miami.
I love it. Well, that's neat, Alina. So we'll keep that open too. So yeah, and again, they would just have to either sell the property or then refinance it if they're going to buy it. And that's kind of how that works. So definitely have options for that. But great question and great opportunity. I'm really glad we got to be a part of this. And again, hope that it goes into contract for you. So let's shift gears to other investments because yours truly is looking for investment properties right now. And I unfortunately don't have the $4 million, but I would be looking for something more around let's call it $800,000 to $1 million range. And I'm open to doing short-term, long-term, or condo hotel. So I'm coming to you, Alina. You're my agent. What are we going to do? What can we put in front of me?
I'm looking at a very exciting project as of now. The reason why I'll explain to you, there's many reasons why, and I definitely want to share with you. Are you on my Instagram by any chance?
I'm on your Instagram, yeah. You want me to log in? I can share your Instagram.
I will do this because I already learned how to do it. And let me see. Share Alina's Instagram. Huh? Can you see my Instagram?
Yes, ma'am.
There we go. Yeah.
I'm learning some tricks. So let me show you this. 1, 2, 3, 4, 5. It's right here. That's it. I don't know if you can see it.
Oh yeah, we can see it.
Yeah, I muted it. Had me dancing for a minute.
To make it big.
No, we can see it. It's fine. It's perfect.
So,
So what is that?
That's the property.
Okay.
It's a very interesting project. Let me stop sharing the screen, right? Okay, I'm back. I need to figure out how to share it, on the bigger screen. I'll do it later. The cost muted your screen share. Oh, because
I mute the music. Yeah. I don't know if you noticed, but I have a reflex when I hear music. I just automatically start dancing. Doesn't matter where I'm at. And in order to keep the show on the rails, if you will, I had to turn the music off. I mean, even if Scott starts whistling or humming, I mean, I just go into it. It's just a DJ.
You should, because it's a Project 11. It's a project that it's a very exclusive, very interesting project that was created by a group 11. Who knows 11? Who doesn't know 11?
Is that the same group that did 7-Eleven?
No. I'll be right back. I'll show you who 11 is.
I'm laughing a little too hard at my own joke there, Scott.
That's all right. You got to have fun. What did you call the group? What was it? It was Group 11? Is that what it was?
Group 11. I said, is that the same group that did
7-Eleven? Oh,
what
11?
She got her hat.
Oh, all right.
I like it.
So 11 is actually a world-known company. This is one of the most successful nightclubs / strip club entertainment in the world. So people know about this place, not only in Miami, not only in the United States. I'm talking about worldwide brand. So and they are so successful, and they started opening a different babies from this business. One of them was Vodka 11 that they're promoting right now, and then it's a construction development project. They start from first tower. They sold out within like 3 months.
Wow.
Then tower 2, they sold out super quickly as well, and they had people waiting like on a waiting line to buy the product, but it was sold out. And they launched a third tower, which is 11 West. It's a third tower, and it's going to be the only building as of now that will be fully managed by Airbnb.
Oh.
Can you imagine and look, I will never be able to compete against Airbnb on their own platform. It's like when you go to the war, to another territory, they know everything, and you know nothing about this place.
Of course, they're going to hedge their bets.
They hide and seek in someone else's house. You're never going to win.
Yeah.
That's the same thing. Airbnb, for only 15% going to be managing those units. They're studios and 1 bedrooms. The starting point is $500,000 plus change. You can get studio. And then 1 bedroom, you're looking at approximately $850,000, $900,000. There are only a couple units left.
Okay.
And 11 is located in a district, and that's the only district that allows parties and music 24/7. What it means: if you come to Miami to enjoy the beach, obviously you don't want to be there. But if you come to Miami to have the experience of a night lifestyle, that's place to be, because this brand also bringing unique parties, pool parties, to the building exclusively for residents and guests of this building. So you can't get in from outside and say like, hi, like, can I paint this? Let me in. You can't. You have to live there. You have to have a property there, or you have to be a guest that rented the property, or a friend of the resident. That's it. There's no other options. Wow. And it's just very exclusive product. It's Las Vegas comes to us.
Well, we very well might. So let me ask you, what type of rents are we expecting to see on something like this? What are they doing?
Well,
So this is the only one that the other two towers is not an Airbnb. This will be the only one that is, or it's the only one managed by Airbnb.
the second tower will be a residential tower. They're not going to allow daily rent there. The first tower, I think short-term rent is allowed there, but it's not going to be managed by Airbnb. The third tower is the only tower that will be fully managed by Airbnb, and I'm putting my chips on the third tower.
Got it.
It's just,
What do you
you
think?
know,
What do you think it's gonna? What cash flow wise? What are we looking at?
it's a speculation because we are in 2023. The building will be finished in 2027. So I don't know where we're going to be in 2027.
Wow.
But
Okay, so that's good to know. So what is it? So then when I just put a deposit to hold it, is that what we're doing?
yes, there's a payment system where you're giving them, I don't have the numbers in front of me. You're giving them like 10%, then another 10%. It's all total 40% during the construction, and then you at the closing you have to come up with a rest, which is 60%, and then you can maybe finance the difference. That's question to you, or maybe you can refi and get the cash out from your down payments, because not everyone wants to freeze 40%.
Sure.
Money. I'm very excited about this product because City of Miami and I don't even City of Miami. No one ever seen anything like this. It's a very unique product, and I think it's gonna.
I think that sounds amazing. I would want something now though. Like I want to put something into action now. What other options can we look at that are available? Like we talked about the W, the condo hotel.
W Fort Lauderdale is something that very interesting because of the name. People, you will be surprised, but people follow names. And once you have such a big brand, people want to rent there. And when they see that they're saving like 50-60% when they rent for Airbnb, comparing to what the rates are on W website, so it's very attractive.
I see.
And it's oceanfront. It's in Fort Lauderdale. It's a great location. Another property that is very interesting is W South Beach.
Okay.
W South Beach has a very, very high occupancy rate, and W South Beach is the property that I will suggest to go with the W management company to manage. They have an amazing program. I saw their numbers, and I can't beat them. They're doing such a great job.
Can you look for something in that price range if they have it, and let me know what those numbers might look like?
Studio, of course. As we speak, I'm gonna be, opening it right now.
Yeah.
If you're looking at the studio, you could. Last year, you could buy it for approximately $1 million. I'm talking about W South Beach.
Yeah.
If you're talking about, actually, if you're talking about W Fort Lauderdale, you can get in with the number like $700,000. The numbers might change because you have to look at the numbers all the time.
Yep.
They go up. They don't go down. Lately, they don't.
I don't want them to go down.
But that's basically the price range that you are looking at. If in W Fort Lauderdale you're looking at 2-bedroom or 2-bedroom and 2 living room, you're gonna be looking at over $1 million. But if you're looking at 1 bedroom, it's gonna be approximately like $700,000 plus minus.
Okay.
With W South Beach at $1 million.
$1 million for a studio.
It's gonna be a studio.
Question for you. Is there a rough percentage return? Like if you were looking at either the $700K property in Fort Lauderdale or the for a studio, or $1 million in South Beach, do you have is there an expectation for what percentage of that purchase price you could get back on an annual rental income after fees? Do you have anything like that available? Because I know when Ted's looking at this, that's going to be one of his considerations, and I know other investors were working with the same thing, right?
Well, we were actually preparing the numbers, and let me open it. So I'm not going to be docs and financing. Okay, that's not. I'm not going to be giving you the numbers for W South Beach because I have to go to archives and look at the numbers, and it was like 1.5 years ago when I got the numbers from the building. For the next meeting, I'll be ready and give you these numbers. And I'm actually opening W Fort Lauderdale presentation as we speak, and I will be. Where are the numbers?
And Alina, if we need time, what we could do, one, I mean, this is a serious conversation. So we could either follow with you directly, or we can record it. We don't have to wait till next Wednesday. If you have information, let's just record it and post it.
All the information. I just need to pull my numbers.
Yeah.
I don't want to give you some number and then it's going to be a little bit off. Oh. You're looking at W Fort Lauderdale. You're looking at approximately net, not counting the mortgage and the interest rate on the mortgage, because that's counting insurance, counting our management fee, and then counting maintenance fee. You're looking at approximately 6%, 5-6%.
Okay, that's cool.
Yeah.
Okay.
Yeah. But there's no interest.
That's great. Well,
in those numbers.
Right. So if hypothetically somebody came in and paid cash, and so Ted, one of the beautiful things about working with Ted on a property like this is he could just stroke a check quickly for $700,000.
Yeah.
And then you would know that he could bring in about 6% of 700. So yeah, that would, net on all of that. That's great. But even somebody that's coming in and financing, they might be slightly cash flow negative for a brief period of time, right? But then, you carry that net negative cash flow for a couple of years potentially. I would think that's going to flip on you then, 24 months down the road, plus you captured all that appreciation. So
yeah, and also don't forget that kind of properties, luxury waterfront properties, people buy also to use them. People that live in New York, that live in other countries, that live up north, they're looking to buy in Miami not only for the investment purpose. They want to enjoy the property while it's cold, in daytime. And that brings a lot of value, especially when you come to Miami during our high season and in wintertime in North States. You're looking at numbers for 2-bedroom property in W South Beach, like $900, $1,200 a night when you bring your family. So basically, you're saving this money. If you want to come for a week, 2 weeks, something that if you didn't have the property, you would have to take it out of your pocket, pay for it. And in this particular case, you don't. I have a lot of clients that they don't even care about making any money on that kind of property from rental revenue. They want to make sure that they don't pay anything out of the pocket, and then the money is secure. They can use the property whenever they want to, and then a couple of years from now, 5-6 years from now, they're going to sell it.
Well, Alina, the other thing too, and I have to caveat this: none of us are accountants, so I'm not giving tax advice. But my understanding is, if you rented it out for the rest of the year and you went down for 2 weeks and used it with your family, that could be a business trip tax write-off because you're checking on the property, working on the property, as long as you had your meetings there to discuss how to use the property, talk about the marketing, do any repairs.
You have your board meetings there, and your family's your board.
There you go. So and when you take that into account, so the tax savings and the potential, is there an opportunity to take depreciation into account, all of that, then you're cash flowing right out of the gate, right? So you're right. It really depends on how it's going to be used by the person buying the property, but it could be a phenomenal investment right out of the gate. So,
So
I
I
mean,
would
Ted,
consider,
I'll rent it. I'll rent it for a week from you, Ted,
perfect.
if you buy it. All right, perfect.
You got that going for me.
All right, there you go. What you got 1 week occupancy guaranteed. All right.
Love it. So,
and
Alina, let's,
there's a vacation rental company, so that will be managing the property for you,
Absolutely.
for your friends, for your family, whoever wants to buy a property.
oh, 100%. So keep your eyes open for opportunities for us, please. And you have something that looks like it may make sense. And I'm happy breaking even the first couple of years, honestly, because I'm focused more on the appreciation, and having somebody else pay my mortgage for me while my asset, grows. And again, you bring up a valid point. Having somewhere to take my family for vacation would be awesome. So keep your eyes open. Let's keep the dialogue going. I think this has been helpful for our viewers, especially the potential investors watching this. So great job as always for Alina Meladina, Scott Benson. I'm Ted Hicks, Real Estate Mortgage Insiders. We'll see you guys next week.